Hello and welcome to myfinancesteacher.org. 10th of May, Friday. I hope you guys are having a nice day. I hope you will have a really nice weekend. And for now, I want to talk about a bearish case for gold. I don't want to scare anyone. I'm not personally turning bearish on gold. I just want to keep my mind open to some possibility of gold price dropping. The scenario that I'm going to look at now is not a likely one, in my opinion, and I guess the chances of gold actually going much deeper compared to where it is right now, probably dipping below 1200, let's say, is, well, far less than 20%, I think. But again, in response to some of the comments, I would like to look at this possibility. And I will also keep my ears open, my eyes open for your comments. I would really appreciate your input, your opinion on this as well. So the first thing I want to start with is this chart of the US dollar. What we might argue here on this chart is that the US dollar has been within this ascending triangle for nearly a year. And again, from history, it's more often that ascending triangles break on the upside rather than on the downside. Plus, we see that in the last month or so, since middle of April, this is the second time dollar is retesting this 50-day moving average. So a case might be made that a successful retest might be followed by a bounce up in the US dollar. Another case might be made that the US dollar has already started the breakout of this ascending triangle, and it's currently just in the retest mode where it's retesting the breakout. And again, a case might be made that a successful retest of this breakout might be followed by a continuation of the US dollar moving upwards. Looking at dollar cycles, let's look at shorter term daily cycles, which the current one started on the 20th of March. So far, it's been going on for about 51 days. Usually these cycles last for a month and a half, 2 months, possibly sometimes 3 months. So this is just within the time frame for some sort of a cycle low. Again, we might argue that cycle low comes somewhere close to the 50-day moving average. And if that cycle finishes, a new cycle starts with an ascending phase. That again supports the hypothesis that a successful retest of this breakout will be followed by a stronger dollar. And of course, a stronger dollar might actually lead to a bearish case for gold. It might lead gold dropping all the way down to, say, 1200. In a very unlikely event, how high can a dollar go over the next several weeks? To answer that question, I think Fibonacci retracements might be helpful. And retracing 78% of the drop that the dollar experienced since early 2017 will bring us somewhere to 100.5 on the US dollar, somewhere between 100 and 101. That actually agrees with the ascending triangle pattern, where a measured move up is the height of the triangle. The height of this triangle is actually 3.8, 3.7 points. So from the breakout at about 97.6, adding this height of 3.7 points to this breakout range of around 97.6 would again give us a target range for the US dollar at about 101. So the height of this triangle also agrees with this relatively longer term Fibonacci retracement numbers, bringing the US dollar back to 78% retracements, somewhere between 100 and 101 on the US dollar index. If that were to happen over the next several weeks, a couple of months, I think that would be pretty painful for gold. Looking at gold chart at the moment, one thing one might notice on the gold chart is that it's So far in this descending channel, it's testing the upper part of the channel, it's retesting the 50-day moving average, and again the case might be made that it might bounce back down from both the 50-day moving average and the upper range of this channel. If that were to happen, we might see gold in the lower 1200s. Another bearish pattern that one might see on the gold chart is somewhat kind of a sloppy head and shoulders formation, something that looks like this, with the neckline at about, well, let's say 1280, and the height of this formation from, well, say 1350 to 1280, that's $70. If gold retests this neckline and retest is unsuccessful, $70 down from the neckline will give us again the price range of around 1210, low 1200s. That's what the charts are showing so far. Looking at the most recent news, it looks like there are some difficulties with the trade deal with China, and if that affects the stock market seriously, after all, it's quite a big deal when tariffs increase by a factor of 2.5 on 200 billion worth of Chinese products. Again, if the stock markets react very negatively to this news sometime next week, there might be a scramble for liquidity and everything might get sold, including gold. So that is a possibility. It's sort of based on fundamental news over the short term to medium term, I think. And looking into the longer term, this is a chart of S&P 500 versus gold. And on this chart, we see that since 2010, 2011, S&P 500 versus gold has actually increased by a factor of over 3 times. So even though it's already quite a substantial rise, it's nowhere near the all-time highs that were reached at the time of the dot-com bubble, which is another 100% higher from where this S&P 500 versus gold is at the moment. So keeping the bearish theme in mind, there is a possibility that this chart continues climbing upwards, meaning the stock prices are going to perform better than gold over the relatively longer term. And last thing, looking back at the charts, historically May and June are summer doldrums, not the greatest time for gold, so that again sort of supports this bearish hypothesis. But again, let me remind you, I don't think this is a very likely outcome. I am relatively bullish on gold. I think the probability that gold drops to, well, say 1220 is, say, around 30% chance of that, and the probability that gold drops below 1200, as I said, is probably far below 20%. This bearish case for gold is basically my attempt at trying to wrap my mind around this possibility and trying to find some indicators that would agree with this significant further decline in gold price into sometime in late June. I think it's quite more likely that gold is going to move significantly higher from where we are at the moment over the next several weeks. I would give this around a 70% chance. As I mentioned in some of my previous videos, I'm trying to slowly, gradually accumulate some positions in the miners, some positions in GDX in general as well. I still have substantial cash position in my portfolio, so I'll continue to accumulate gradually. Even if gold drops down to, let's say, 1250 to retest, let's say, this October high, I would only be glad to get some GDX at a relatively lower price. So that is my strategy over the next several weeks, and this has been my strategy over the last several weeks as well. Let me know if this video scared you. Let me know what do you think is the outlook for gold price into, say, mid-summer. Once you've done typing your comments, remember to hit that like button. I would really appreciate that. Subscribe to the channel if you haven't. If you are subscribed, hit that bell notification so that you don't miss any of the following videos where I try to provide as much value as possible. Again, have a good weekend and good luck in your trades.